All right. You guys can see me in the VTF? Oh, my microphone was on. You guys can see me in the VTF? Yeah, okay, cool. Thank you. It's on a little bit of a different setup here than usual. All right, we have the full disclosure here, so I think it's okay that I'm on the video also. Let's do this disclosure. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure has not changed from yesterday. It's the same. I did hold a little bit of this Google into the report. Just helping me a little bit. I'm just not getting the follow-through I want on this Google. Just broke that 109.50 where we saw that Arcus seller just to make new highs by 8 cents. 8 cents. It's not what you want to see. If stock fails to give new highs like that, it can sometimes be a real struggle. What's Chipotle doing here after hours on their numbers? CMG. Beasting. Man, let me tell you, I eat so much Chipotle, how could this stock not go up? What percentage of that 2.21 billion of revenue is me? Yeah, Google's having struggles because it needs to clear that area, and I don't like that it just got above the 109.50 seller and didn't give follow through. It's not a great sign. So we'll see here. It's our first important kind of day on earnings. Microsoft's numbers are not great, but it's not reacting terribly to it. It was off like 3+%, I think, today going into the report. I didn't think those Microsoft numbers looked great compared to expectations, but it's only down a couple bucks here from where it actually closed. Whereas the Google report, I thought looked pretty solid, but it's not. It's up a little bit, but it's not really, up 3.5 bucks after hours. It's not really the type of move I'm looking for when they're pricing in 7. And you got Chipotle, obviously doing really well so far. Chipotle is the real winner here, like always, crushing the game. So we'll see. Circle back to your question there, Edwin, in a bit. These earnings numbers here, I don't know. I'm not looking at how these stocks, particularly Google and Microsoft, which are so important, though. What do we got Visa doing? Visa's not doing a whole ton either here after hours. Up a couple bucks from where it closed. Another Visa is I believe a top 10 company by market cap as well, so has a big effect on the market. We got TXN. This one too. None of these are like major. I guess TXN up $5 after the close, $165 stock. No real kind of major moves here where I'm breathing a sigh of relief for the market. At least not now. I'm certainly not looking at these numbers and being overwhelmed by how amazing Microsoft and Google and Visa are to be able to say, guys, that's it. We de-risked here for 2 days into these earnings reports and into the Fed and everything, and now we're off to the races because of how well these things are trading. As a matter of fact, the more I sit here and watch this Google, the worse I think it's trading. Not trading well at all. Back down to below 108 as we're chatting about it. But we'll see. I think we got to let the dust settle on these things a little bit. The earnings calls are going to be important. So we'll see what the earnings call looks like, what guidance looks like, how that moves these stocks, and then we'll kind of take it from there, I guess. Tomorrow, obviously, we have the Fed, so tomorrow's going to be a really big day. In addition to how the market's going to digest Google, Microsoft, and Visa. Then we got Facebook after hours tomorrow, and then we got Apple and Amazon on Thursday. So this is just the first part of what is potentially going to be a really big week here. And coming into today's trading session, like I said in the morning meeting, I wanted to see this market create a pivot point here. You know, SPYs had a weak day 2 days ago, an inside day yesterday, but you know, Q's kind of had 2 weaker days in a row. They pulled back into that equilibrium zone. IWM has shown relative strength recently, had a weak day 2 days ago as well. But that's just a pullback into equilibrium. Yesterday gave an inside day. Today they also gave a second inside day. Really tight day for the IWM. IWM actually held in best. But we saw further de-risking, and we were able to see this even in the option flow yesterday. We saw further de-risking in NASDAQ names and the mega cap companies, which inclined me to further believe that they could go up more. So that's why I was saying, you know, it's always fun to guess. Whenever it comes to earnings reports, that's all you can do is just totally guess. You know, what do you think? How do you think they're going to report? How do you think they're going to react? Because how they report and how they react can sometimes be very different things, right? Even if you, like in theory, had some sort of insider information, which of course none of us as professional traders would ever act upon. But even in theory, if you have like some sort of insider information, you knew what the numbers were going to be, you still have no idea how the stock's actually going to react to those numbers, right? The reaction to the move can vary based on market environment and kind of where we are in the cycle coming into it. But just given kind of the de-risking today and yesterday that seemed to be led by mega cap stocks, it led to a guess for me that these things would be up after hours, not down. And so far it's just very muted reactions. Microsoft back to 250 right now. Microsoft is almost back to where it started from coming into the report. I didn't think that those numbers were that great. Google's numbers I thought were better here peripherally, and you know, Google is trading where it closed yesterday. You know, barely up from where it closed today. So we'll see what happens. I think it needs a little bit more time. As far as individual trades go, I mean, I got nothing for you guys today, to be totally honest. Energy pulled back, which was kind of expected. I mean, maybe not necessarily expected, but we did say don't chase energy today, right? You have to react to the move. Sorry, don't react to the move after it's already happened. Anticipate the move before it happens. And that's what we did successfully yesterday with energy. So you don't want to chase day two. Anybody who chased day two today, chased the gap up in energy, they got punished. But hopefully it was none of us because we discussed it in the meeting. Financials were relatively weak pre-market. They stayed relatively weak. You got an inside day and down for XLF. Not the end of the world. You know, just pulling back into that kind of equilibrium zone as the market, like I was saying earlier, chose today to kind of de-risk. So we were paying attention to that. Further disappointment just from like Snap and Pins that I'm still looking to see if they can give some sort of bounce. At this point, they probably need to see the Facebook report, because especially we're not getting a ton of clarity here from Google and Microsoft. Though it did seem that Google reported solid YouTube numbers. So curious to see how that translates into, you know, obviously I don't think that YouTube is relying on subscriber growth, even though they do have that version that you can be a paying subscriber for. I think most people are watching the commercials. But the key, I think, with Google, and I'd actually like to see closer numbers on this because I didn't see them. Want to take a closer look at what the Google ad revenue, ad growth, advertisements looks like. Because that's what's wrecked these other names, right? That's what's wrecked Snap and Pins and these social media companies, is the slowdown in advertisement growth. So didn't see closely what the Google numbers as far as advertisement growth looks like or versus expectations. That's a really big thing right now. You know, are the advertisers still spending on these types of platforms? And there's been a lot of chatter on if it's just cyclical and it's going to come back. You know, it just seems to me, and this has been my kind of bull case on Snap, there's just so many users on that thing, and users with Snap still increased on that report, but they wrecked it all the way down, and this thing is just, it's been so tight these last 2 days. It hasn't been able to do anything. Pinterest also just another really tight day. This Pinterest basically made new lows today outside of that May 24th day, which was the day that Snap actually warned. So that was a disappointment for me today too. I think Rock had a great call here at or near lows that led to this really nice bounce, and this thing just totally flatlined. So I really don't have anything for you guys today. For me, I said in the morning meeting it was going to be a wait and see mode type of day for me, and I thought it was going to be for the market also. See what these earnings reports look like and see what the Fed's able to do. And I also had a busy day where I was off the desk for a lot midday, so I purposefully did not do a ton of new execution or new trading or anything like that because I just want to see what the market can provide. One little beacon of light out there that I think is worth mentioning, even though it closed off of highs and is giving a little bit of an upside tail and a downside tail, is XBI. I thought XBI held in really well today. XBI closed up 0.5% on the day, and that's when we have the NASDAQ, closing nicely red. Qs are up here after hours, probably off of Google. But even with that, it was like a down 2% day today for the NASDAQ, yet the XBI was able to be green. So that's the relative strength I'm looking for from this XBI. This thing was disappointing to me with this false breakout that occurred on July 20th, and it hasn't really done too much since then, but it's still holding its base, resumed some relative strength today, so we'll see if that's able to continue. Semiconductors we're also continuing to pay attention to, but just the de-risk in the market, I think, got to these semis, despite the fact that NXPI reported what looked like good numbers, but they sold this gap up in the NXPI also. They sold that back down. AMD kind of lost the tail from yesterday. You really don't want to see that happen, at least on an intraday basis. NVIDIA did the same thing. So I think we're just in total wait and see mode here for the market, guys. And I hope people position themselves properly for the trading day. And by that I mean didn't do too much. And that's fine. We're just kind of in wait and see mode here and waiting for more information, and I don't have anything else to say about it. So if anybody has any specific questions or anybody has any names that they want me to review, this would be a good time for it. So I saw that Edwin had asked a question. Do you think SIGA has more legs to go higher? Do you think it looks overextended? So it's certainly extended. It's certainly extended. And this SIGA has given plenty of opportunities to get in over the course of the last 2 days. So if you're already in it, I would say trim and trail, just like anything else. This could be one of those names. I don't know what the float looks like, but this could be one of those names where you're looking at this thing in a couple of days and it's at 24 bucks. So trim and trail, especially with these types of names when they're exploding like this, you have no idea where they can go if you're already in. If you're not already in, you don't want to chase. It's exactly what I was saying about energy this morning. Yesterday was the day to buy energy. If you didn't buy it yesterday and it was a great day for it, and now it's gapping up even on top of that today, are you putting yourself in a good risk-reward situation to chase, even if it goes higher, right? And it didn't go higher, but even if it goes higher, right? Even if Oxy went from 66 to 69 today, it doesn't make it a good trade just because you made money in it. We don't want to chase these day twos. And in SIGA, if you're not already in it, tomorrow's going to be a potential day 3. It doesn't mean that it can't go higher, especially these things with momentum. If you want a real thought process on it, I don't think that monkeypox is a repeat of COVID. So if people are jumping into these things because they think that, it's the next, Moderna type of situation with the move that we saw from Moderna and some of those other names, I don't see that. What's up, Felipe? I don't see that. I think that these things are going to come right back down to earth. I think that we're going to be looking at this, as a $8 stock, $7 stock, probably at some point again in the future. But it also means I'm not going to just jump in front of momentum either, right? So that's not necessarily going to help anybody. So I hope that helps you, Edwin. Does anybody else have any questions? Does anybody else have anything that they want me to review or go over? That Microsoft 250 is a really tough spot there, Felipe. And I didn't think those numbers were great, but I'm rooting for you on it. T3 does have a new office. I'm sitting in it today. It's 88 Pine Street. If you've been to the previous office, it's like a 30th of the size. It's very, very small. I basically just came here today to get lunch with the CEO of T3, which is a great experience, just to get a little FaceTime in with him. Otherwise, I'm going to be back to not trading from this place. I mean, these monitors are like trying to read charts off these monitors. They're from like 1980. It's ridiculous. Pat is back tomorrow morning. What's up, Sean? You want to say hello to everybody in the VTF?
Always do.
There's a camera right there.
What's up, everybody? Who do we got on?
The great Sean Hendelman.
Definitely not great.
We got this many people in here
nice.
now.
Nice.
Everybody say hello to Sean. Everybody. Sean's here running the show.
Not really. This guy runs the show. All right, thanks, bud.
Thanks, Sean. You heading out?
I got a couple meetings midtown, so.
Cool. All right. Good seeing you. Cool. Josh is going to see Fish tonight. He's going to the Fish concert, so he took off early. From Ahmed, stop loss on 1 tick below support is not working anymore. Do you have any advice on the stop loss? Can you give me an example? It'd be ideal if you could give me an example, so we can review it and really make sure that you're looking at like the right support. You know, one of the things that's tricky about support and resistance is that it's oftentimes a zone, right? So it is you're not necessarily just going to be right 1 penny. So it's hard to, you know, do you go to the low portion of the zone? Do you go to the high portion of the zone? That's always going to be a little bit trickier. This Google's still not performing well. Yeah, while I wait for the example from Ahmed, if anybody else has any questions, if they want to put it in the VTF, welcome to do so. Cool, all over the place. From Bill, any game plan around FOMC? Probably not much into it, but looking for anything specific other than the rate amount. No, I mean, last I saw, which was a day or two ago, the market was still pricing in a 20% probability of a 100 basis point hike. I don't think that's going to happen. 75 basis points is, I think, almost certainly what's going to happen. So when the market just meets expectations, a lot of times we get a lot of volatility with no direction, or sometimes we get volatility if expectations are met, and that volatility resolves to the upside just because people are feeling, you know, relieved that the event itself is over. The language around it's probably going to be more important than anything else. I'm curious to hear the language on the balance sheet runoff, because we were seeing, and I never did any research on it, I feel like we were seeing some information that people were posting here on the VTF that they were not liquidating as much on the balance sheet as they originally said they were going to. I know that that was supposed to be a build-in type of process, so I probably do a little bit more research on it, you know, tonight, tomorrow morning. But for the most part, I'm not really expecting any surprises. I think 75 basis points, see how the market reacts, see what the language looks like, and you know, I would, as long as there's no surprises, I would expect either a lot of volatility with no move or the possibility of a little upside relief. But we'll see how that comes. From Bandit, can you talk about anticipating the pivot on a downtrend? On a downtrend extended stock? So you mean going counter trend? Yeah, you can't. You can't. And let me just make sure I'm saying this right. So anticipating pivots, right? So I don't ever want to anticipate pivots, even if I'm anticipating like a pivot low in an uptrend where we should get upside continuation. I still don't want to anticipate the pivot. I let the pivot come to me. Right, so what I discuss is, like, if it's uptrending, it pulls back into equilibrium. There's a couple specific setups I'm looking for where the chart kind of shows me it's creating the pivot, and then I'm buying it on the way up, and I have an area to buy it versus, like when that continuation hammer comes into equilibrium, or the inside nub comes in kind of that equilibrium zone on your 5 or 15 minute chart. On the downside, you can't anticipate anything. You gotta like see that the doji is building. Now there's areas where you start to look for it. Right, you start to look for it when you've had 3 big down 5-minute bars in a row, and I think that even happened a little bit on the Qs. Yeah, where was that I called that out? Was it here? might have been here at 11:30, which obviously failed. It was either that or it was here. I don't exactly remember. I don't exactly remember where I called out like one counter trend trade, I feel like, in the Qs today, and I thought it bounced a little bit off of it and then failed, which would mean that it wasn't this. So I don't remember exactly where it was. But like, once you have like 3 of these red bars in a row like this, and it's starting to get extended, that's when you can start to look to see if some sort of higher volume doji comes in. But you still need it to come in. And then like maybe this candle, because the volume maximized on the candle before it. So ideally the volume maximizes on the candle in which the pivot happens. Sometimes the volume maximizes on the candle directly prior to it. So that's kind of the case here. I'd be looking at this increasing in volume. I'd be looking at the fact that we just had 5 red bars in a row, and I'd be like, all right, now I just want to see what like a bottoming type tail come in where I can buy it versus that low. And that, you know, was kind of coming in here. So I would potentially take this. I might not. So the only degree of anticipation that I'm going to do here is that I might not wait for the bar to fully close. If there's like a minute, you know, these are 5-minute charts here. So if I'm 4 minutes in and there's a minute left and it looks like there's going to be an obvious tail here, I might start pressing that button a little bit early before the candle closed. That can be a little bit dangerous, but it can also, the flip side is it can give you a little bit of a jump start. And then you're long versus that low, and you're taking stock off of 1-to-1, then you're taking more off at the 80 MA, then you're taking more off at the equilibrium area, and then this thing, you know, potentially is going to break down and give downside continuation. So that would be the extent of it. We really don't want to catch a falling knife, and we don't want to anticipate in a downtrending stock or downside momentum that a low is going to come in. It's a very, very dangerous game. You need to be buying, even in an uptrend, let alone in a downtrend. If you're looking to go long, you almost always want to be buying on the way up and then put that stop loss in. And that way, at least you're already buying in the direction in which it's moving. So, yep, hope that helps. From Ahmed, if you are selling short in front of support, the upper band of the stop loss triggers up to 15 cents. Then the stock goes back. I need you to give me, okay, Walmart here. So you're telling me Walmart had resistance at 122.15. All right, first thing I would say right away, daily chart support, daily chart resistance. That's what I really care about. I don't like to trade, and as a matter of fact, I never trade off of intraday support and resistance. It's too wishy-washy. It doesn't mean enough. You know, I'll trade off intraday chart patterns a little bit more. I don't like to trade off of intraday support and resistance. It's just too sloppy. I don't think it means enough because it's not formed necessarily by institutional money. So that would be the first thing that I would say to you there. So you're telling me that Walmart, and I'm assuming on an intraday chart here, had created some resistance around 122.15. I see this high at 122.26. This high is 121.65. This high is 121.73. This high is 121.94. This high is 122.09. This high is 122.69. I don't see it at all. I don't see it at all. Which I think, and first of all, you know, it's awesome to ask the question, right? Because this is how you're going to improve. I think you need to recheck your premise on what support and resistance is. I don't see resistance at 122.15 in Walmart on any time frame, intraday, which I don't care that much about, or daily chart. We want these specific support and resistances to be coming primarily off of our daily charts to be able to trade versus or through. So, and then you want to short off a resistance, and you know, if it's tricky if it's a zone, like I was saying before. It's not always a zone. Sometimes it is just like a perfect line, and then you can just have that stop loss, and you know exactly where your stop is supposed to be, a penny difference. If it's a zone, it's a little bit trickier because either you need to use the top of the zone, or you need to find something on the small time frame that confirms the zone. Like let's just say, I see there's a tail here on higher volume at 122.69. Let's just make up an example here. Let's say that Walmart has daily chart resistance between 122.25 and 123. So you know that. And the upper band of that's going to be 123. So you could choose to short versus 123, or you could say to yourself, I know this is where the resistance zone is, and oh look, I just got a higher volume shooting star into resistance, in the resistance zone. I'm going to go short versus the 122.69 high, use a stop loss at 122.70, because that is where we just created a shooting star in that resistance zone. That would be a way to trade a zone, or otherwise you kind of have to give to the absolute high, and that can require you to sometimes take on more risk. Does that help, Ahmed? Thanks, Geoff. Look at the daily, sure. Which I also see no clear resistance here. You got a high here at 121.76, and this wouldn't even be resistance no matter what. Like I don't see any daily. I just see a lot of slop in this area. Like here is clear support, 118. Very clear support, right? You got this absolute low, did tick all the way through it to 117.27. So maybe there's a little bit of a zone, but that was on heavy downside momentum on day 4, so they overshot it a little bit. Look at these lows: 118.17, 117.90, 118.23, 117.97, 118.22. Like very clear, obvious support at 118. If you want, we can call it the zone between 118 and 117.26 and be a little bit loose with it, but you can pretty much narrow this down to exactly 117. I don't really see any resistance on this chart, on this daily chart. Like, I don't know. There was resistance that broke and got sloppy. Like, you could have argued at one point in the past that this was some resistance, like this was like a resistance area around this like 125 to 127. But that's been broken. That's gone, and then it gapped all the way below it, and then there's no resistance up here really, because it's just a gap. Like you could say this absolute high is potential resistance, 133.40. Yep, I just did. 118 is all I see. 118 support. I don't really see any clear obvious resistance on the daily chart here. Microsoft break up. Microsoft's above 150. Not fantastic follow through on that. I'm still disappointed by this Google. Google wedged and is trying to break the wedge up. Thanks, Gabriel. Cool. I hope that helps him, Ed. But it's like what I want to trade off of is this 118. Or what are we talking about with shop today, right? 130. I mean, not 130. 30. Look, this is so clear and obvious. Like, let's go back to May. May 12th, I got a low at $30.80. This low, a little high. What about these lows? 29.76, 29.96. 30.63. What about this low? 29.72. What about these lows? 30.28. 30.02. So it's $30 area. Maybe down to 29.74, or if you want to try to get real tight on that and get into a zone. And then today, what did it hold? 30.55. So it came down into that support area roughly, didn't get all the way to it, and once again held it. Like that's clear support. And there's some resistance here in this name around $40, right? Little bit sloppy, but this high is 40.68. This high is 39.50. This high is $40.10. This high is 41.37, overshot it a little bit. This high is $40.86, overshot a little bit, but roughly the 40 area is going to be resistance on the daily chart. The 30 area is going to be support on the daily chart. Yeah, that's why you got Felipe's trading that 250 area a little bit. From Jay here. Oh, Jay's asking about chop. Cool, good timing. Good timing. So you bought chop around 31.50 at around 10.15. on the way down, okay? And watched it all day until it sold for a decent loss after it fell down through the VWAP at 245. So you held it all the way through this low at 30.56. And then you got out at a higher price. So at one point you were down more. You got out at 31.20, but yet you held it through a low of 30.56. I hate that sale, Jay. I got to tell you, I hate that sale at 245 that you're describing to me if you held it through those lows. It's very poor game planning, and I can tell you why in a second. Just let me finish reading your question. This happens to me quite often when I'm selling for a loss, and soon after that, don't overread it, the stock goes up, making new highs, and I could have made a nice profit. I know I have to do better with exiting my position, but is there anything specific that I need to pay closer attention to? What was your reason to exit? What was your reason to exit at 245 at 31.20? Because this is what I'm looking at here. All right. First of all, I hate your execution, and Josh is kind of saying that also. I hate your long execution. Is what it is. Sometimes we have bad execution, but I'll tell you why. This thing, the ADMA, finally just caught up to price. This is usually when the stock starts going down, right? This is the opposite. Remember we talked about Triple M intraday today? Someone brought up Triple M right here, and I said, oh, this is exactly where I would look for a long. How did I know to say that? I'm not a brilliant genius. I've just seen it so many times. When the ADMA catches up to price for the first time on these big gaps, usually you see a bounce, or if it's a weak stock, the opposite of a bounce, a dip, right? This is very normal. Triple M gaps up great on good earnings, sells off up the open, pulls into equilibrium, creates a pivot point, that's the bottom, goes up. Shop. Weak stock, gaps down really big. Opening price action works its way lower, whatever, it's sloppy. ADMA catches up. This is exactly when the stock should be going down. And where you're buying at whatever you just said, 31.50, you're buying right as this ADMA caught up for the first time when the stock should be going down. But you're not near lows, and you're not near the daily support level of 30 bucks. So it's bad price and bad timing on the long execution, in my opinion. If you're buying here at 31.50, there's not even a pivot. You know, going back to what I was just saying before about someone asked me about anticipating like bottoms or whatever in weak downtrending stocks. We don't anticipate bottoms. Even if it's a strong stock, we want to ideally buy things on the way up. Even if it's Triple M here, and I think it could pivot in this ADMA, I'm not buying at the ADMA and hoping. This thing was getting smoked into it. It could just continue to go straight down and fully fill the gap, but it's very probable, not necessarily this big of a bounce, but it's very, you know, all the time we see at least an attempted bounce or the opposite when that ADMA catches up, and that's what we're seeing here in Shopify also. I want to be buying this on the way up. I want to be buying it earlier or later, not here. I want to be buying it closer to 30 bucks, or at least closer to lows, or earlier when there was a lot more extension. Now I don't even have extension here. This is exactly when it can continue. Next problem. You go long here, you endure the risk all the way down to $30.56. You let this thing go $1 against you. I don't know where your stop loss is. I don't know where your game plan is. What if this thing just continued to crater? Because it easily could have. This ADMA just caught up. Microsoft saying they don't see corporate slowdown. This thing could have continued to crater to 30, and then it gets down to that big support level, and it's so weak and people are so upset about the news that it breaks 30. Now you have momentum traders coming in to short the breakdown. Next thing you know, this thing's at 28.50 intraday. Could have happened. So first thing, you got to make sure when you're taking your buy, whatever the buy is, anywhere the buy is, that you know where you're taking the loss on the trade before you get into it. I really, really dislike that you held this thing against you to this amount and then got out at what seems like a random price to me at a random time at 31.20 and you lost 30 cents. You put on all of this risk for no reward. No, but Jay, and by the way, I don't want you to think I'm like being hard on you, or same thing with the med. These are the questions that I want you guys to be asking in afternoon meetings, because this is the only way you guys are going to get better. Because I'm not going to go through on my own and try to figure out, where you guys traded every single trade. There's potentially a couple hundred people in here. I can't go through every single trader's trades and try to give them individual feedback. It's only going to happen if you guys actually bring this stuff up in the afternoon meeting so we can review it as a team. And again, Jay, I'm really appreciative. Ahmed, I'm really appreciative, even though I'm kind of, for lack of a better word, hating on your trade here a little bit. You bringing this up is going to make you a better trader, and it's going to make everybody else in the virtual trading floor a better trader also. So it's really good stuff. But from a game planning perspective, I don't know where you're planning on giving this to on the risk, but you held this thing $1 against you just to get out 20 cents against you. That is someone who is taking on maximum risk for no reward. If you had a game plan in place that maybe your game plan was, I'm just going to make this up, I'm going to give it all the way down to $30. And I would say, fine, huge daily support level. We just saw it on the daily chart. You got a massive daily support level here. I love Shopify. There's a gap fill up to $37 here. I'm gonna come in and I'm gonna risk $1.50 to try to get $5, $6, $7 worth of upside. I can't hate on that. Right? How can I hate on you, wanting to come in and risk $1.50? Maybe you have a game plan you're going to build in. You're starting with a feeler here, and you're planning on building in all the way to 30. I still would have said you probably should have bought earlier, but I could totally be on board for that game plan. But if that's the game plan, you can't be getting out at 31.20. You got to be holding this thing to the close. And then at the close, then you have to ask yourself, is it worth it for me to keep it overnight? And at that point, if the answer is no, it's not worth it for me to take overnight risk, then liquidate the position and call it a day. And it is what it is. You had your game plan, you held the thing all day, it just didn't give you enough of a profit cushion, you're getting out. I would call that a trade that didn't succeed and didn't fail. It's kind of just like whatever type of trade. Yeah, but that doesn't, Jade, that doesn't matter. It doesn't matter what it did after you got out. Honestly, it could have gone up, it could have gone down. I think there's a degree of randomness there. It doesn't matter what it did after you got out. The key is the game plan. It's the game plan that creates the consistency, and it's the game plan and the rules that create consistent profitability. It doesn't matter what the stock does after the fact. What matters is, did you have a game plan in place here that has risk management, has reward maximization, and has the potential to give you consistent profitability? And I can tell you without a doubt, based on where you exited the position, that the answer to that is no. This will not give you consistent profitability if you are putting on all of this risk and not letting the trade play out. First of all, I still don't know where your game plan was to take your loss if this position was just continuing to go straight against you. That's question number one, and you need to know that before you even get into it. And then question number two is, well, what's my game plan for reward maximization? Like I'm saying earlier, I just made up a game plan for you because I would do this game plan potentially. I'm not afraid to come in if I think I can get $7 worth of reward on a daily chart and start building in for $1.50 of risk. I'm not afraid to do that. In which case, I would have bought it $31.50. I would have held it down to $30.50. I probably would have added on the way down, honestly, versus my stop loss at $30 because that's my game plan based on the daily chart. And then I would have had a game plan in place for how this thing's going to work out on the upside. And then when this thing closes at, 31.62 or whatever, I would have said to myself, you know what? I had a game plan for this trade. It's not giving me enough of a profit cushion to keep it overnight, right? This is where things get a little bit more nuanced because now we're going from a day trade to a swing trade, right? So now you got to ask yourself, is the risk reward on this worth it for me to keep it overnight without having a profit? Well, that also, Jay, is something that you have to build into your game plan, right? You should never be having a game plan in place that can get you locked out. So that would be another game planning error. So I really hope that helps. I love these types of questions because we can review it, and it's going to make you a better trader. It's going to make everybody a better trader. So that's good stuff. from Ryan A. I just lost the question. There it is. Sometimes I have trouble setting stops on momentum trades when there is a big range. For example, if ATUS were to rally to 11.75 this morning. Where's my mouse? Is that the price that we talked about? The break of the inside day from yesterday for the shooter continuation? 11.75. Yep. Yep. If it rallied to 11.75 this morning, where would you place your stop loss if you had to get long? Sure. So the first thing I would say to you is, and this happens to me all the time, sometimes I do all the research pre-market. I come up with a game plan. I know where I want to enter the position. And then when the market opens, I think we just went over this with a trade I took in NEO like a week or so ago. When the market opens and it rips all the way to the price where I want to enter the position, I look at it and I go, well, this thing just ripped $2 in 6 minutes, and I don't want to come in and risk $2 in a $30 stock here at this spot. It's too much risk. So even though I did all of the research that I needed to do, this just now is it's just not a trade that I can take because the risk doesn't make sense. The risk reward on the entry for where the stop loss has to be doesn't make sense. So you need to have an appropriate stop loss. What the stop loss is depends on the trade. But here are some great typical examples of stop losses that you can use. If it's a breakout, you can use the ignition bar. If it is a trending stock, you use the last pivot low. If there was a very heavy volume type of Maribozu candlestick, you can use that Maribozu as a low. So like where the stop loss would be on this ATUS, I don't know. I got to see what it looks like when it gets up to 11.75. But let's just just to do a thought exercise. Let's say that the price wasn't 11.75. Let's say the price was 11.55 was our trigger entry, right? So this is what the chart looks like. It ripped straight down, created this pivot, gave a 100% reversal of this pivot. It's going up on momentum. It's getting up to 11.55. It just got up there in about 6 minutes from 11.21. My only possible stop loss that I could use would be the low of the day. It's the only pivot. It's the opening low. It's the only pivot point. And then I would say to myself, on this $11 stock, is it worth it for me to come in and risk 35 cents? Most likely, not 100% of the time, most likely the answer to that's going to be no for me. I can already tell you on this stock, I don't know the company. I'm not going to have the confidence to risk. It's an $11 stock. Would I just say 35 cents worth of risk? I'm not going to come in and risk that much on a percentage basis in a company that I don't know. And to me, that's where the fundamentals do matter. So I would just view it. I did all my research. My alert's going off here as it's approaching 11.55, and I would just look at it and go, okay, I can't take the trade. Sorry. And again, that totally happens. Yeah, same thing with me, Diego. Totally happen. And then it still might give you another opportunity. Like it's a phenomenal trade, but it just gave a massive move, and now it's extended, let's just say, and it pulls back and gives a higher low in equilibrium, and I can find a different execution. That's what I did in NEO the other day when I chatted with you guys about it to go over my own trade. And that's why I do that sometimes, like go over my own trading executions to try to help you guys. I'm not really doing it for my health. But that happened in NEO, right? NEO, I don't remember which day that was. It was this day, I think, right? The 21st. Looking at this daily chart, I wonder how I didn't lose money on it. But I think that's the day it was. I don't think I can go back that far on my 5-minute. Was it the 21st? Through the inside day high? Yeah, this was it. Let me see if I can zoom in just to give you an example. Yeah, this was it. And the buy trigger was through the previous day's high, I think. 2095. Look at this thing. It ripped in under 10 minutes from 2016 to 2095. That's my entry price. It's a $20 stock. And I even like the company. And I looked at this and I said, I can't buy this. I want to. It's part of my game plan. I did the research for it. But I'm not going to come in and risk 80 cents in a $20 stock after it just moved 80 cents in 5 minutes. It's a terrible risk-reward situation. In order for me to take that and risk this 80 cents, I need to think that this thing can give me $5 today. Do I think that Neo's going to 26 bucks today? Probably not. Or even 26 bucks over the course of the next few days, maybe. That's going to be a very difficult trade. So I just didn't take it. And then it reset up for me. Jerry in the VTF called out that it just tailed down into equilibrium. That then became my trade. I couldn't take the original trade that I game planned, but I knew the importance of the area. It was extended, so it pulled back in equilibrium. It gave a pretty wide-ranging tail, but a tail all the same. And I came in and I was buying like 2080 or something like that versus 2063. Took on 20 or 17 cents worth of risk. Got my risk covered, and then the trade failed and I got stopped out. So that's a way to be able to execute and have my stop loss. Because sometimes you just, like you're saying here, Ryan, sometimes you can't. It's just too much risk. And that's fine. You either pass on the trade, you wait for the next one that's the appropriate amount of risk, or you wait for it to reset up in a way that's an appropriate amount of risk. All right. What else here? From Rich Carter. I get breakout even when I have 1-to-1 risk to reward instead of taking a partial 1-to-1. Is that being too greedy? I look for the bigger move. Happened to me in the T-triple-Qs. Rich, I'm not sure I totally understand the question. Are you saying that you raise your stop to your entry price at a certain point instead of getting the sale? Because I can tell you why I hate that. I hate that because, if that's what you're saying, I hate that because my entry price doesn't matter to the market. What matters to the market, yeah, so I don't like that. I would rather sell 50% cover, I get it. I get the thought process for sure. If you raise your stop to your entry price, you can have even more stock if you get a continued move on it, which will in theory make you more. What I've seen in practice is that you get shaken out of a lot of things that still work. That's what I've seen in practice. And you would not have gotten shaken out or stopped out had you used the original proper stop loss. That's my experience from it. So what I've committed to for my trading is everything that I'm looking to do is going to be based on what the market tells me. Is based on what the market tells me. So I want to be implementing stop losses that are important to the market, not important to me. So a pivot point's important to the market. A pivot point's a spot where buyers took control from sellers or sellers took control from buyers. Ignition bars are important in the market. It's the bar in which a breakout occurred. They tend to be on high volume. Hammer capitulation candlesticks are important in the market. The low of that's going to be important in the market. I can use that as a stop loss. That's just some examples. And now I know that my idea was wrong. Another thing for me personally, and you should know yourself personally, if I were to use the stop loss at the break-even price and get shaken out of it, and then it starts to go up even a little bit, I would fight the stock, and I would turn winners into losers. And the reason I would do that is because I'm seeing myself get stopped out of something that I don't know if the idea itself is wrong. And if I'm getting stopped out of something, and I feel that my idea might still be right, I make mistakes. I need to know when I liquidate a position for a loss or a break-even trade or whatever, I need to know that the idea was wrong, that the idea failed, and I'm out of it, and that's that. So that's my thought process on that for you, Rich. Keep data on it, though. Keep data and statistics and do what's working for you. Stopped you out. Got you. Yep. No problem. Cool. Sorry, just catching up on the comments here. Microsoft call starts at 5:30. Josh, where'd you get that no slowdown comment from? I don't know. The stock did uptick when Josh put that in. I don't know if it's a coincidence or not, if it was misinformation. Josh is usually pretty on point with his info. I think the next I'm seeing here is from Jay Cools, long pins at 1687. Your long pin's at 1687. It stays low. That's a great price. That's when it got called out. This is a great price, and it's great execution. If you bought this after the low came in and you bought this on the way up when this hammer came in, this is the type of execution I love. This is what I want to see from traders. Yes, that's awesome. So very weak stock here, gotten super beaten up on the daily. It's down a massive amount just in 3 trading sessions, partially because of snap. Downtrending off of the open, extremely weak, getting extended. Volume's picking up here. It's not massive, but the volume's picking up a little bit. Gives you this hammer doji. It's small. You buy it on the way up. You've got 10 cents risk versus lows. The ADMA is more than 10 cents above. This is perfect. You get your risk covered. You're nice and greedy. You keep the other 50% of the position. It doesn't give fantastic follow through. I think that's why Rock liquidated his position. I think he was involved in it with you. Doesn't give fantastic follow through, but you've got such a good price here. It's a $17 stock. You're 50 cents in the money. This is definitely something with that price I support keeping overnight, especially into this support zone, especially because I'm biased and I think it's overdone. So obviously you can't have a stop out overnight. Yeah, pin seems to be upticking here after hours, probably in relation to Google. This is part of what I was looking for, honestly, after hours today. So you can't have a stop in after hours, obviously. What I do is I put my stops in. I put my stops into the market at 9:45 every morning the next day. So at 9:45 tomorrow, I would put my stop in. And what I do when I commit to keeping a position overnight is I commit to trading it based on the daily chart. So what I would do tomorrow is I'd be putting my stop in at today's low, because that's your original stop, and then seeing if this thing can break up and seeing if I can eventually raise my stop over time. If you get a really big move tomorrow, you still have 50% of your position left. Maybe you can take a little bit off. Like if you got to move up to like $19 tomorrow, so space between 19 and 20, I would look to take a partial sale. And then the rest of it, I'd be looking to hold and see if this thing can be testing resistance again at $22. If you get decent earnings coming out from Facebook and Google and Microsoft are maybe helping it out a little bit after hours right now. So that's what I would do. And that, by the way, guys, this is the type of execution that I'm talking about. We know that this got super beaten up. We know that there is a rough daily support area around $17. We know it's extended into it on the daily. It overshoots it a little bit on the intraday. So we don't just buy at 17 and hope, right? It's trading down here. We look for a signal to be able to buy on the way up in an important daily area. It gives you that signal here with little doji. You buy it on the way up. You put your stop loss in, 10 cents worth of risk. This thing has the potential to give even just a mediocre bounce to $19 on the daily chart. And now you're coming in here and you've got 10 cents of risk for, target one $1.50 worth of reward. 15x. And then you could get even further follow through on it. I wouldn't say, it depends how heavy you are. If you got 10,000 shares and you want to take 100 shares, even less than that. You got 4,000 shares and you want to take 100 shares off every 10 cents on the way up. That's something I would probably do if on a bigger position, 4,000 plus shares. I would just, starting at probably 17.75 here, I might just piece out, 100 shares every 10 cents. That way I'm down to 3,000 shares by the time it gets up to like $19 or so. I've put that in my pocket. I might rebuy that intraday on dips for some cash flow type trading, and then look for more real sales between, again, just back to equilibrium. ADMA on the daily chart's at $19. So that's your real target number one based on this daily chart is $19. So that $19 to $20 area, the high of the gap here is $19.43. So you had $19 would be like a first real target. So I would only sell more earlier than that if I had enough size where I could sell small increments just to try to make some cash flow back and forth. So 1,000 shares left. I would see what this thing can do for you, and maybe in front of $19, look to piece out of maybe another So depending on how greedy you want to be, two to 500 shares of the 1,000 shares that you're holding in the space between, like, let's call it 1860 and 19 quarter is probably what I would do. And then I would hold that other, again, depending on how greedy you want to be, 800 to 500 shares for a move up to $22. And then it goes back to what I've said in these other meetings. You don't need to have the move to $22 happen very often to be making really big money off of the risk that you put on. You know, you risked $200 in the trade. You came in with 10 cents worth of risk on 2,000 shares. You risked $200. That's something that, you know, this almost just about the smallest trader here on our team can do the same thing. Yet, you could be holding, you know, 1,000 shares here for, you know, a $1.50 move. That's $1,000 is $1,500. Then you could be holding, you know, $500, $600, $700 shares for potentially move to $22. And again, how often do you need that to happen percentage-wise? Maybe, you know, 10% of the time on this type of trade, you're catching a move to $22 and you still have 500 shares left. You risk $200 to begin with. Think about the risk reward. Like, that could be the trade that makes your entire month. It doesn't need to happen that often, provided that on the failed trades that you're having, which we all have, that your risk management is consistent. Guys, just, you know, as a team here, this is perfect. Like, that is exactly what we're looking for. Daily chart reward on intraday risk with perfect execution, combining a daily support level with the intraday signal to actually execute it. Perfect. Good stuff. Love it. I really hope you get the reward you deserve and you get follow through. Maybe you don't. Maybe you get stopped out. But if you get stopped out, it's a win-win situation. And then you're, you know, whatever, you just move on to the next one, and maybe it's the next one that gives you the 10 cents risk and gives you the, you know, $5 worth of reward. I love it. Just keep in mind, you know, you do got Facebook tomorrow. This is going to move big on that, so you're taking a little additional risk with that. And I think the Pinterest earnings is early August, but you should definitely know the specific date on that, because, like, you know, even this amount of reward here, where you're bucking the money, is probably not enough to hold it into the earnings report. But I'll tell you what, if this thing's at $20 into the earnings report, if this thing's at $22 into the earnings report, then you take 200-300 shares and you hold it into the report. And then same thing, maybe you give it back a few dollars, but maybe it's causing a breakout above 22, and where's our next level? $27.50, $28? That's reward maximization. I love it. Love it. August 1st. Thanks, Jerry. All right. Do you have a physical checkoff list early on, say 7 to 10 points before you enter the trade? I didn't, but I tell people to utilize the probability class. Right, whatever that is, 6-7 probability points that I go over that tend to be ubiquitous for every trade, and you can give like a it wouldn't just be yes or no. I think it would be yes, neutral, no, like yes, it's on my side, or no, this layer of probability is against me, or this layer of probability is neutral and is insignificant and not for me or against me into the situation. And then you kind of build out like a score, like a physical checklist score on that. Okay. It looks like I got through the questions. Guys, this is what I want. You know, this could have been a very fast afternoon meeting today, because I was off the desk for a large portion of the day. I didn't do a lot of personal trading. Like I said earlier, I'm kind of in wait and see mode here a little bit on the market. So this, you know, very easily could have just been a meeting that could have been over super fast. We're a team. The meetings here are going to be a lot of what you make out of them. So, you know, don't be embarrassed about your mistakes. Josh, I did have 2 frozen guava margaritas at lunch today, but it was on the boss's dime, the boss's boss. But, you know, again, you ask these types of questions, and that's how you're going to get better. That's how we're all going to get better. I try on my own to, you know, sometimes review my own trades, and I'm not afraid, you guys have all seen me do it, to tear myself up when I make mistakes, you know, when I do something stupid. So if I do it and I make mistakes and I do stupid things trading sometimes, no one else should be embarrassed about, you know, struggling about something or not doing something properly and wanting to bring it up in an afternoon meeting so we can all review it as a team, because that's going to make everybody better. So, Diego, that's great stuff today, guys. I will see you all tomorrow. Have a fantastic night. Big day tomorrow. Big day tomorrow.